video of our multi-video seller series, we shall look at 12 common costs in connection with selling a home. In this video, we are not going to cover costs in relation to preparing or repairing a home in advance of placing it on the market. We shall be looking solely at the costs that would appear on the final settlement statement that a title company or attorney company will prepare in advance of the closing. We shall also be providing you with some further information as to what specifically these items are for which you will be paying at closing.
Number 1. Real estate commissions. The largest cost on the settlement statement will be the real estate commissions. The statement will list both the commission to the listing agent and the commission to the co-brokering agent who brings the buyer to the home and represents the buyer during the sale from the very first viewing of the home to the closing date. Real estate commissions vary, and you may well ask why there isn't a fixed real estate commission that is standard for all of the brokerages. That is because it is an antitrust violation for agents to collaborate together and attribute a specific figure as a commission amount. This is termed price fixing and occurs when competing brokers agree to set a standard price for sales commissions, fees, or management rates. Rather, the real estate agents must let competition in the open market establish these prices. The commission charged by our team will be covered in another video, which is going to specifically cover the topic of commission.
Number 2. Administrative fees. As well as being paid a commission, most real estate offices charge what is sometimes termed an administrative fee, and this differs from office to office. At the time of preparing this information, this fee lies somewhere in the region of $300 to $500. This fee is also sometimes called a transaction fee or broker-only commission. This fee is paid by both the buyer and seller to their respective real estate offices and normally is not charged unless the buyer or seller closes on the transaction.
Number 3. Closing company fee. Both the buyer and seller will also be paying a fee to the title company or attorney office for handling the transaction and taking it from contract to close. Again, these fees vary, and at the time of preparing this information, the fees charged by a closing company lie in the region of $400 to $600. Often, foreign national sellers will be charged a higher fee because the closing company has additional steps to perform on account of FIRPTA regulations. The topic of FIRPTA, which is the Foreign Investor in Real Property Tax Act, will be covered later in our video series in the section specifically pertinent to homeowners selling from abroad.
Number 4. Title insurance. Generally, a seller is responsible for paying for the title insurance to insure the title on the home for the duration of the buyer's ownership. Should a title dispute arise after the sale, the title insurance company will be responsible for paying specific legal damages depending on the policy. Title insurance costs are calculated by multiplying the purchase price of a seller's home by the rate per thousand which the title insurance company uses. The rate per thousand is a going rate that is used for every $1,000 that is calculated for the value of the home. Title insurance for homeowners generally protects purchasers and existing owners of a residential property against risks that could cause stress and financial loss in the future.
Number 5. Property title search fee. Another fee pertaining to title is the property title search fee. The property title search is usually performed by a title search company who is hired and initially paid by the closing company to perform the title search, and then the closing company is then reimbursed this fee by the seller at closing. At the time of preparing this information, this fee is about $200 to $300. Put simply, a property title search is a search for documents on a specific property. The property title, which defines who has legal ownership of a home, might not contain all of the updated information about liens on a property. It also might not include a complete history of the property. A property title search, however, is comprehensive, so it looks for all local records and sources to uncover all available information about a property. Most importantly, a property title search will tell the closing company who, besides the homeowner, has a claim on the home. A property title search will also include any deed restrictions, which means it will reveal if there are any limits on how the property may be used.
Number 6. Municipal lien search fee. Next in line is the municipal lien search fee or city lien search fee. At the time of preparing this information, it is about $200 to $300. Like the title search, this search again is prepared by a third party and paid for by the closing company, who are then reimbursed by the seller at closing. A municipal lien search looks for unrecorded liens in addition to code violations, special assessments, utility and open or expired permit issues that are associated with the home. The closing company will work with the homeowner to have these issues rectified before closing.
Number 7. HOA Estoppel Letter Fee. If the home is in a community which has a homeowners association, or HOA, then the closing company has to order an estoppel letter from the HOA. The cost for this is very varied. At the time of preparing this information, it can range from about $100 to $500. Once again, it is a fee initially paid by the closing agent, who is later reimbursed by the seller at closing. An estoppel letter is a legal document provided by an HOA or a management company that operates on behalf of the HOA, describing the current financial status of the property. This includes past due balances, current fees, details of future assessments, and any violations. In communities where the seller has been paying both an HOA fee and also a club fee for community clubhouse type facilities, 2 estoppel letters will be ordered, thus incurring 2 fees.
Number 8. Documentary stamps on the deed. People who transfer real estate by deed must pay a transfer fee, this fee being charged by the recording offices in most counties. In Florida, this fee is called the Florida Documentary Stamp Tax. It is charged at 70 cents for every $100 off the sales price.
Number 9. Property tax and HOA fee prorations. Once the seller has a signed contract on their home, real estate taxes and HOA fees can be prorated by the closing agent using the closing date on the contract. Real estate taxes are paid in arrears, and the tax bill comes out in November, allowing the homeowner to pay the taxes for that year. Unless the homeowner is closing on their sale in November or December, having paid the tax bill for the year in which the closing is taking place, the seller will be responsible for paying the real estate taxes from January 1st to the closing date. The HOA fees are prorated at the same time by the closing agent, making sure that the homeowner will be refunded by the buyer for any HOA fees paid up front for any period in which the buyer will be occupying the home and not the seller.
Number 10. Closing cost contribution to buyer. Should the contract have been negotiated with the seller contributing towards the buyer's closing costs, as is sometimes the case, or should the seller and buyer agree to the seller giving the buyer a repair credit following an inspection of the property, these amounts will show on the settlement statement as a credit to the buyer and a debit to the seller.
Number 11. Mortgage payoff and other deductions. Other deductions on the settlement statement may include the payoff of an existing mortgage or mortgages on the home which is being sold, settlement of any back real estate taxes owed by the seller for previous years on the home, any HOA arrears on the home, and any charges to contractors or management agents which the seller has authorized to be paid at closing.
Number 12. FIRPTA Tax Withholding. On settlement statements for homeowners selling from abroad, one additional line item will be the FIRPTA Tax Withholding, which at the time of providing this information is 15% of the purchase price. Again, this will be covered in greater detail in our video devoted solely to the topic of FIRPTA. Thanks for watching, and make sure to check out the rest of the videos in this seller series.